Good morning. Welcome to Thursday's Trading Hour. I'm Reema Tendulkar. With me is Sonia Shenoy. And so far, it's been a steady morning of trade. The Nifty is holding above 24,800. The mid-cap index is outperforming significantly. The mid-cap index is up 0.8%, while the Nifty and the Sensex are just up close to about 0.2%. And you know, Sonia, slowly and steadily, in baby steps, markets continue to inch up through the course of this week. So week to date, the Nifty is up more than 1%. The mid-cap index has gained close to about 2.1%. And today it's good to see banks outperform. So the Nifty banking index too is up 200 points. So there is that relative outperformance there.
Absolutely, absolutely, Reema. You know, the good part is if you map from 14th of August, right, the Nifty is up almost 700 points from then. So every bad news that has been thrown at this market has sort of been digested by the market well, and it's sort of up and away. And today a lot of interesting stocks are moving around. Of course, you have Zomato and Paytm that is top of mind. But apart from that as well, just look at something like an Indian Hotels. That stock is up almost about 3.5% right now. Godrej Consumer is doing pretty well. So, you know, all in all, you'd have to say that this is a market where there's so many different themes. The Nifty Bank is up almost about 0.5%. And, of course, the big news flow that we're tracking is Zomato and, you know, Paytm and what's happened over there. Remember, Zomato has acquired Paytm's ticketing business for a little over 2,000 crore rupees as part of its strategy to focus more on its core financial services offering. To discuss more on this, we're joined by Gurmeet Chadha of Complete Circle Consultants. Gurmeet, thank you so much for joining us. Always appreciate your time here. Now, there are two angles to this, right? One is, of course, Zomato is trying to get a larger wallet share of the consumer with this particular deal. But the stock has also rallied significantly. So now it's become a super app of sorts. Do you think a lot of the good news is in the price, or is there more to go?
No, I don't think so. I think there is a lot more to go. I think people had concerns when they did Blinkit. And, you know, you remember how the price came down post-IPO to 50, 60 levels. They had a few soft quarters. But if you see now, if you just compare last 1 year, the food delivery revenues have grown up from 1,800 crores to 2,200 crores. The quick commerce has gone up from 300 to almost 1,000 crores. And Dipinder Goyal himself said that this will outpace food delivery in next 2 to 3 years. They are, you know, increasing their dark store count. They are currently at about 650, already leading. Swiggy, Instamart is around 500, and they plan to go up to 2,000, you know, by 2027. And, you know, Ola is coming up with dark stores, and you have Zepto going up to 700. So there's a lead they have on quick commerce. Book My Show also, you know, on this, especially entertainment and ticketing, they did 18 crore tickets last year with about 3 crore customers. Zomato has 7 crore. So it will challenge the, you know, I think currently almost monopoly status of Book My Show. And Zomato will bring in, you know, it may not be great news for Book My Show, but that's also survived a lot of crisis. I think this will add to the overall, as you rightly said, super app thing. Their live business will also go up from 400 odd crores to 700-800 crores. So I think it's a great development. For 1 or 2 quarters, there could be a bit of a, you know, burn in that case. But I think this is looking now very good. And mind you, the government has a view on e-commerce. Mr. Piyush Goyal came up with a statement. So they don't want deep discounts to be the business model. They want value addition and platform and convenience to be the business model. And I think that's where probably they have an edge.
Undoubtedly, the execution at Zomato has been flawless to grow the categories it's already present in. And now this will be the third vector of growth. But the question is that are they overpaying to some extent? Because they're paying nearly 2,000 crore to acquire 10 million customers that Paytm's ticketing business has today. So that's approximately 2,000 rupee per customer. And even if you compare it with, say, Book My Show, which has so far been the dominant player in the entire ticketing and live business, their revenues are only 800 crore rupees. So while no doubt over the longer term, it can make this work and it will add that growth lever for Zomato. But do you think on the valuation front, 7 times EV to sales is what Zomato is paying for this business? Is it too much?
You know, I think we need slightly different lens rather than just looking at the current revenue. So if you, as I said, if you see Zomato has almost, you know, total customer base of about 7 crore, and the average transacting customers are about 2 crores a month. Book My Show total customer base is 3 crores. So I think what they can bring to the table, you get a head start in this already. So you don't need to really invest from scratch. So you get a head start and you can leverage your existing client base and the amazing data analytics they have to really build on this. And what is happening is, other than the movie ticketing business, which is around 70%, the live event share is going up. So if you see Book My Show financials, there were two expense items. One was the commissions paid to the movie production houses, and second was the artist fees. That's going up rapidly. So number of live events are catching up, whether those are stand-up events, whether those are some of the other live cricketing events, sports events, and that part of the revenue will also go up. So I think they will leverage that base. And Zomato also has a very, very good loyalty program. So, a lot of business model can be pivoted. So I think it's more got to do with the growth. See, in business like Zomato, you need to be continuously growing at 50, 60%. Food delivery will now grow at 25%. Quick commerce is the one which will do 50, 60%. You need a third vector, as you rightly said, which can match up to that growth to sustain the horse which is running at the speed.
So the acquisition, right, that they've made, the management believes that this acquisition will help Zomato increase its focus on the business, where they expect to increase the GOV from 3,200 crores this year to 10,000 crores in FY26. Do you think that's a bit of an ambitious target, or do you think that's achievable? And, now it's a sort of a well-discovered story, right? I mean, at 60, at 70, there was, of course, still a little bit of people were on the fence, but now most of the street is convinced. So do you think from here to generate alpha will be a bit tough?
No, I don't think so. I think it's a question of if they can demonstrate what they did in Blinkit. As I said, if you can demonstrate, as I said, last year they were doing 300 crores in quick commerce, and this year they're almost touching 1,000. And they're talking of exceeding food delivery. So if we can demonstrate same that in the entertainment and ticketing, and Sonia, mind you, entertainment and ticketing has much wider, implication in terms of expansion. So right now you are at home kind of a model. This is getting out of home kind of a model, right? So it gives you a completely different space to expand and pivot. And I think they are thinking of those lines. And, in e-commerce, the growth is always geometric with the kind of internet penetration now India has. I personally think, and maybe it's a little early to say, this has the makings of the big commerce giant, something what Amazon did in US, provided that they stick to the right capital allocation. They've done few mistakes in the past. They've learned from it. So if they stick to good capital allocation, which in my view is good in this case, I think this has more legs to play. This will be more valued now, like the FMCG names and the e-commerce name, rather than just looking at it as a new age business.
You're saying that in a way that you're hopeful or optimistic or confident that the playbook will be similar to what they did when they acquired Blinkit and the growth that followed for the quick commerce. Perhaps we're going to see something similar. Well, after they acquired Blinkit, we also did see the stock price fall. I think it was at 150, 180, it went all the way down to 40, 50 rupees. And then that phenomenal up, one-way rally started. What do you think this is going to do, this acquisition is going to do to their bottom line? And do you think over the next, 6 to 12 months, as the investments play out, we could see, the acquisition hurting the company's bottom line?
Well, I'll be happy if it corrects, because, we are on the accumulation side. So I'll be praying that it corrects a little more so that you can build more sizable positions. We have, as a disclaimer, around 2%. In the portfolio, which I think was a little less considering. Now, obviously, everything is a hindsight in these bull markets. But I agree with you. For first couple of quarters, you could see a bit of a drag because any acquisition comes with, its own set of challenges. And it's not really a very cash-rich company, right? When you do an all-cash deal, that will have its challenges. But that's okay. As I said, these are businesses where you continuously need growth levers. I think this will be another big one in lines of what they did with Blinkit.
Okay, Gurmeet, very, very helpful there. And I think you've convinced us about the long-term story of Zomato, despite the rally that we've seen. Thank you so much for joining us and, speaking to us about this entire story. So positive coming through for Zomato, acquiring Paytm's insider business, the ticketing and the events ticketing business, and of course the potential that they have over there. Zomato, by the way, has cooled off. Paytm is still hanging out in the green line, but nothing much to write home about. So let's slip into a quick break. On the other side, we'll discuss what's buzzing in the commodity space with Manisha Gupta. Stay with us. Welcome back. Hope you're having a good morning so far. The market surely is. So after some really good gains under our belt, the market continues to inch higher. It's now just 200 points away from that 25,000 landmark yet again. But let's also talk about what's happening in the world of commodities. Manisha Gupta joins in, and today the focus is on crude. Manisha, good morning.
Well, some support for the equity markets could also be coming in from crude prices, because we've seen fourth day of decline here. And with this cutoff that we've seen in case of prices, we are now trading at a 6-month lows when it comes to the crude oil prices. Well, there are demand concerns because of the weak economic data. The Chinese imports have been on the weaker side. When you look at the US numbers as well, they have revised their non-farm payroll data for the month of March 2023 to 2024, and that seems to be weighing on as well. The FOMC minutes, well, that they do tell that there's a possibility of a rate cut in the month of September, but a 25 basis points has been factored in by the markets long back, and you wouldn't perhaps see a reaction to that if that is what comes. 50 basis points, well, yes, that could really make the markets shake up yet again. On the other side, the ceasefire conversations between Hamas and Israel also don't seem to be leading anywhere. But the important point really is that even as it has been 30 months between Russia, Ukraine, and Hamas and Israel have been on for this year as well, it hasn't really impacted crude supplies. Yes, there have been delayed because of the Red Sea concerns there, but actual impact on supplies hasn't happened. So the markets really seem to be discounting that too at this point in time. Is the reason you have seen prices decline 6.7% on a week-on-week basis. We have turned negative on a month-on-month basis as well. And also when you look at the last 12 months, we are down by 8% right now. So just around nudging that $70 per barrel mark on WTI right now, it does look bearish for the crude prices for the very near term at least.
Thank you very much for that. By the way, watch out for IREDA. That stock has gained close to about 7.5%. The board yesterday met and they've considered raising up to 4,500 crore rupees on the 29th of August. That's when the board will meet via the FPO or the QIP route. So fundraising on the anvil for IREDA, and the stock continues to surge. We'll get into a break. We'll come back and discuss market technicals with Apurva Sheth from Samco Securities. Welcome back. Bajaj Auto is in focus after CNBC-TV18 learns that the company has received approval for 13 vehicles under the PLI scheme. We also learned from sources that the company is seeking a GST cut on CNG two-wheelers. Tim C is here with us on the phone line with more details. Tim C.
Well, yes, that's what sources have indicated to us, that Bajaj Auto has sought a GST cut on CNG two-wheelers. Bajaj Auto's plea to North Block is that CNG two-wheelers should be considered under the category of electric vehicles, as they both are on the clean fuel, and thus they seek the division in the GST rate structure for CNG two-wheelers at par with EV vehicles at 5%. What we are also given to understand from sources that the decision is now being sent to the Fitment Committee for a close consideration. And remember, Bajaj Auto's Rajiv Bajaj met officials at North Block recently. We had updated also about that. And yes, now this particular move coming in. Let's see what the Fitment Committee takes a view. And yes, whether this view is taken in the upcoming GST Council meeting on 9th of September, that is something that we'll have to wait and watch for.
Hey, Tim C, stay on. Sources also say that the government is likely to give a GST relief to Infosys, foreign airlines and foreign shipping lines. Tell us a little more about that.
Well, yes, the proposal on the table of senior officials at North Block is to consider giving relaxation from the recently sent GST notices to Infosys, to 10 foreign airlines operating in the country and several foreign shipping lines which are operating in the country. Remember, Infosys had got over 30,000 crore rupees of tax demand, on which Infosys said that they need some time to get back. For the first year, they actually got a waiver also from the government. It was an interim report that was being shared, and based on the clarification for financial year 17-18, they've got a relief also on the tax demand. And for the remaining years, Infosys has sought more time to reply to the GST authorities. And we are given to understand that since there's a common thread of services based on which this demand has been sent to Infosys, to foreign shipping lines and to foreign airlines. There was a June circular issued recently by the GST Council, and that circular is likely to get further relaxed in the upcoming council meeting to end all these three set of notices being sent to Infosys, to 10 foreign airlines and to foreign shipping lines. That could come in the upcoming council meeting on September 9th. So let's see, it could be a big breather. Foreign airlines, remember, were sent over 10,000 crore worth of notices. Similarly, Infosys is contesting 30,000 crore worth of notices. And yes, foreign air shipping lines are contesting about a lakh more of notices. So all these will be relaxed because government wants tax certainty and ease of doing business in the country.
Important story. Timsi, thank you for getting us that. Let's get back to the markets and talk about the market technicals, important levels from here on. Apurva Sheth from Samco Securities is now with us. Apurva, morning. Your thoughts on the day so far, and what would you recommend by way of individual stock ideas?
Thank you for inviting me on the show. So Nifty has been on a winning streak for the last 6 days, and chances of touching a new all-time high are bright again. So the recent fall that we had seen, Nifty has already retraced 78.6% of the fall, and chances of moving higher to 25,000 levels are quite bright because there's also support from the global markets coming in. Bank Nifty, on the other hand, has been trading in a range of 49,800 to 51,000. So a decisive breakout in Bank Nifty could take it higher to a rally. We can see a rally of about 1,000 points. So from 51,000 to 52,000, there could be a chance that we might see a sharp rally in Bank Nifty. On the individual stock front, we have Alembic Limited. So Alembic Limited, we would recommend with a stop loss of 150 and a target of 180. It holds about 28% stake in Alembic Pharma Limited, which the value of this stake would be around 6,000 crores, and the current market cap of Alembic Limited is about 4,000 crores. Technically, the stock has been consolidating in a range of 140 to 160. So a breakout from 160 would push the stock higher to 180 levels. Another stock is CSC Limited, which has we have seen good volumes happening in the stock yesterday as well as today. So chances of a big upside from here are bright. So we would recommend with a stop loss of 168 for a target of 240.
Okay, thanks a lot for that. Well, we will take a short break on that note. When we come back, we'll put the spotlight on Kalyan Jewellers, Shyam Metallics and Power Grid and find out why they are buzzing in trade. Stay tuned. Welcome back to Trading Hour on CNBC-TV18. The market is definitely picking up pace, and we're going to talk about a couple of buzzing stocks that you need to get your eyes on. One of them is Kalyan Jewellers. It's buzzing on the back of a block deal. Mangalam joins in now to give us more details on all of that, and in a bit, we'll talk about some other movers in trade, names like Shyam Metallics. So Mangalam, first over to you.
Well, for Kalyan Jewellers, the most important thing is that, supply overhang is done. Warburg Pincus, which held about 9% stake in the company as of June 2024, they've sold their entire stake in the company via block deals. What's even better is that the people who've bought it, 2.4% of that stake has been bought by the promoters of the company itself, and that's unusual because increasingly we are seeing promoters cash out, but here a promoter is actually buying stake from the private equity, and the other 5.7% was bought by institutions, and this we can say because the deal happened in the block window where, retail participants aren't allowed, so entire stake bought by strong hands itself. And fundamentally as well, if you look at the first quarter, Kalyan Jewellers' revenue growth was 26.5%, better than everyone else in the industry, including the industry leader, as was the net profit growth of 24% as well, with the same-store sales growth of 10% itself. After the first quarter, the company did say that they are targeting mid to high single-digit sort of same-store sales growth this year, will increase their share of revenue coming in from non-South as well, as they have been doing over the last few quarters. And additionally, they've planned the sale of immovable non-core assets in FY25, so that could aid their balance sheet a little more and tighten it. As a result of which, with the supply overhang having been done, the stock has bounced back.
Thank you very much for that. Kalyan Jewellers is up now 64% since the start of the year. Another big mover today, Shyam Metallics. Here, UBS has initiated coverage with a buy rating, and what stands out is how high the target price is. So they're seeing a lot of upside in this, Nigel.
Well, that's right. UBS has initiated coverage on Shyam Metallics, and they have a target price of around 1,200 rupees a share. Now, they are valuing the company at around 8 times EV per EBITDA. The EBITDA that they're factoring in is for FY 26-27, and on that multiple, they're giving it an 8 times multiple. But they're factoring in that the EBITDA growth from year on, that's between 2024 to 2027, well, it will compound at a rate of around 39%. So they're expecting a big upside from current EBITDA levels. What makes the company stand out? Well, according to them, they say that the pragmatic approach to focus on the value chain. They've also focused on diversifying products as well as metals, and their backward integration. That's what's going to hold them in good stead. Well, that's the qualitative aspect. But on the quantitative aspect, there are three big factors that they have stated. One is on the value-added products as a percentage of revenue as well as EBITDA. Currently, it's at around 57 to around 61%. They're expecting that number to go to the high 60s. Higher value-added products means better margins. And so they're expecting the ROCE to move from around 22% to around 28% by 2027. And finally, the EBITDA per ton, as of yesterday's close, they believe that the markets were factoring in an EBITDA per ton of roughly around 3,700 rupees. But they are factoring in a number of more than 6,000 rupees by 2027. Put all this together, UBS believes that that Shyam Metallics is well placed, and that's why they have a target price of around 1,200 rupees per share. Back to you.
Okay, thanks a lot for that. Well, Power Grid is also in focus on the back of positive commentary from Goldman Sachs. Vivek is here to tell us more about that. Vivek, over to you.
Well, that's right. So Power Grid is in focus. Very interestingly, some media reports have indicated that there has been a cancellation of what is essentially a 12,700 crore order win that the company had got as far as the Fatehpur Badla HVDC project is concerned. Remember, Power Grid had emerged as the L1 bidder for this particular project. So Goldman Sachs today has reacted to this particular development. What they're saying is that media reports that indicate that Power Grid may lose out on this particular bid, this could go ahead and impact the order book by close to 12%. The work in hand of the order book of Power Grid currently is close to 1.1 trillion rupees, close to 1.1 lakh crore. So there's a 12% hit that Power Grid estimates that Power Grid could take on the back of this particular supposed cancellation. There has been no official confirmation from the management as yet. Now, however, what Goldman Sachs is saying is that it's possible that this is mainly due to certain technical conditions that may have been applied. They believe that there is a high probability of Power Grid going ahead and winning this particular bid again in case this particular bid comes up once again for the tendering. Remember, what Goldman says is that company has a competitive edge in TBCB over other private developers. Number one, due to the very large balance sheet, and number two, due to the lower cost of debt that Power Grid currently enjoys. Along with that, 70% plus market share as far as auctions have been conducted in this particular year so far. They expect Power Grid to be the biggest beneficiary of close to $500 billion of Power Grid capex that the country will see over the next few years.
Thank you very much for that. Another stock reacting to a brokerage upgrade, a brokerage note is Mphasis, where Nuvama has upgraded Mphasis now to a buy. Remember, Mphasis has been an underperformer in the entire IT pack because the high interest rates in the US were negatively impacting the business of Mphasis. So for 2-3 years in a row, it's underperformed the industry, and now it believes the tide is turning. The same factors that led to the underperformance will now lead to Mphasis outperformance. So that's the stock up 3%. Get into a break. We'll discuss more on the markets with Anirudh Garg from Inva Asset PMS. Stay tuned. Welcome back. Still steady above 24,800 on the Nifty. News coming in on Paras Defense, where they're looking at some fundraise in their board meeting on the 27th of August. That's next week. The stock has been a big outperformer, and today it's up close to about 4.5%. Anirudh Garg from Inva Asset PMS is now with us to talk about the markets, the way forward, and various themes you should be betting on. Anirudh, your view is that one should look at the underperforming sectors like consumer staples, IT, and there is going to be this rotational shift away from the erstwhile leaders. So maybe that's defense, capital goods, industrials, into the underperforming sectors. Take us through this view of yours.
Hi. First of all, a very good afternoon. A very good morning to all the viewers of CNBC-TV18.
Good morning.
Thank you for having me, Reema. So what we have seen, we believe that we are into an old economy run. Because why? The valuations back in 2021, 2022, when this run started, for the new economy, be it IT, pharma, FMCG, was predominantly high. And all these old economy sectors were comparatively priced pretty cheaper. And there was a lot of relative change. Relative change, by relative change, I mean some advantage they had today, which they did not have, say, a couple of years back. So back in 2022, these sectors had a lot of advantages. The government had increased the capex, the GST collections were coming in, there was a majority government, there was a push on capital expenditure. Now what has happened is, again, two things. One, the relative change which was there has diminished a bit post-elections, though the total spending has not decreased, and this is a good thing, but the incremental spending that has to be there would now become a little problematic. And the valuation in these sectors, the way these stocks have run up in the last 2 years, a majority of them, say something like a Mazagon Docks or a Cochin Shipyard, these stocks have run up 10 times in the last 2 years. So somewhere we feel that now the valuations in these sectors have peaked out. Somewhere we believe the margins have also and the relative change has diminished. For us, this is not a right thing. And then automatically the shift is happening to the other sectors like IT, FMCG, pharma, which had underperformed for the 2 years. Things have gotten better there. Pharma is seeing new relative change coming in from the US. IT has completed its cycle, which is generally, deeper than FMCG, but shallower than the commodities. IT has done it. We see expectation of the US rate cut. So we see the US growth rates revising in the coming few months. So somewhere the relative change is now favoring the sectors which had underperformed, and the sectors which had outperformed are now bound for some time and price correction.
Okay. So, let's talk a little bit, Anirudh, about some of these new age sectors, right? I'm trying to ask you about names like Zomato-Paytm, Nykaa, Honasa, all of these digital first businesses that we're looking at, and how they're in the news for all the right and the wrong reasons. I mean, big multi-baggers, and you have some underperformers here as well. What do you do with names like this? What do you do with the space overall? How do you navigate it?
So, see, they're wonderful companies set up by wonderful entrepreneurs out there. They have changed the way a particular type of transaction in the market was perceived. You had to, before Blinkit, getting things from the market required some help and stuff like that. Now you don't require anyone. Blinkit has changed the model altogether. In 10 minutes, your thing is delivered to you. And somewhere you tend to consume, when such facilities are given, you tend to consume more than you actually need. So these guys are increasing the market as a whole and also shifting the entire market on them. See, before Zomato came in, you had only McDonald's and Domino's, and these were the two companies that we used to talk about and analyze very well. Now I don't need a Domino's pizza. I need something, a new entrepreneur, a new chef knows how to prepare pizza, can sell it through a Zomato, and it can be delivered to me, as soon as possible. So I don't need my home delivered pizza now to be a Domino's pizza. So somewhere we feel that the way the businesses are being done due to these new age companies have changed. The meter that we keep primarily, the number one is that we should be consumers of these businesses, and to an extent that we are not ready to replace them with some other upcoming app or something. So these are wonderful businesses. You just have to make sure that the business models are right, because if the demand is there, if the consumers are using them, they're not under some regulatory framework, and there is an open market to cater to, these companies should do pretty well. Just a word of caution that somewhere we need to look at the valuations of overall market and the stocks as well. Because when I believe the best way to enter these companies is whenever there is a correction, or you can do your SIPs. Whenever there is a major correction of say 20, 25, 30%, you can go in for a lump sum. Otherwise, you can keep doing your SIPs in your wonderful companies.
So do you have any of these new age tech companies in your PMS portfolio with the appropriate disclosure, if you could tell us?
We have missed out on the Zomato rally because we were more focused on the capital goods side of things, and that played out really well for us for the last couple of years. So yes, whenever these stocks show correction, because see, one point, Rima, in the markets that I've seen in the last 17, 18 years of my experience is that corrections are inevitable. They have to come from time to time. And those are the times when you have to keep your conviction and buy the stocks that you were liking when the markets or those stocks were expensive.
Okay, so where do you have conviction right now, Anirudh? Apart from the sectors that we spoke about, anything else where you expect good earnings to come through? There are so many themes, right? I mean, last week, for example, this whole cables and wires theme was doing very well, where one brokerage spoke about cables and wires growth doubling compared to GDP over the next 4 to 5 years, purely because of the real estate boom. Any of these themes, home building, real estate, that you like?
See, I believe that all these themes are intact. First of all, premiumization theme that is going on in India and around the world is intact. There is no problem. Somewhere they get expensive, then they correct, and then the bull run continues. That is the nature of a bull run. You're absolutely right. The wire themes, especially the branded ones, are doing pretty well, and they will keep on adding market share and keep on increasing in value. But somewhere I feel that the overall market is now entering a zone where I would call these markets very expensive. So I will proceed, tread with caution. A lot of money has been made in the last 2 years. Equally important is to preserve that money, because in bull runs you tend to make mistakes following the momentum at the very end. So I believe enter safer stocks, enter safer shares, or buy these shares through SIP. And whenever there is a correction, you tend to put in your lump sums, because somewhere the market is giving hints that the valuations from here. For the large caps, I believe it's still okay. Large caps are not that expensive. We see our technical targets for the Nifty are 26,000 plus. No standard disclosure here that we can revise them. But for other themes or sectors which were prevalent and winning in the mid and small caps, arena, we believe that somewhere the rally has fizzled out.
So when you say the rally has fizzled out, is it also in some of these companies and sectors that have given huge returns up until now? So something like a defense, something like the PSU names. If you have presence there, then do you sort of churn out?
Yes, I believe so.
Okay. All right. Thanks a lot for joining in. Appreciate your time here on CNBC TV18. Let's slip into a short break. Gautam Badalia from Route Mobile will be joining in next to discuss the business outlook. Stay tuned.
Welcome back. Let's get a corporate conversation going. The company on our radar right now is Route Mobile. They came out with the numbers about a month back, but just to get a temperature check on the current quarter, we have with us Gautam Badalia, Chief Investor Relations, and the Group's Chief Strategic Officer of the company now joining in. Gautam, thank you very much for joining in. I want to straight away get to your guidance for the full year at 18 to 22%. According to some analysts, it's a bit disappointing considering the revenue synergies you'll get from the Proximus deal plus the Vodafone Idea deal, which went live. So can you explain this guidance, and are you being conservative?
Sure. Good morning, Rima, and good morning, everyone. So I think last quarter, I think we demonstrated among all the CPaaS players globally the best organic growth rates. I mean, since November of last year, there were a few headwinds, I think, in the sector that we were kind of operating, especially with the funding winter and a lot of large global enterprises looking at cost optimization. I think with this interest rate cycle now looking at kind of reversing, we have already started witnessing, growth now coming back. And last year, I think we've also been working with Proximus and the group on integrations and have been doing a little bit of crystal ball exercise. And we have kind of now worked on a few strategic pivots. I mean, a case in point is we are now securing long-term volumes with a lot of these large strategic players and then tying those volume up with the telcos. So essentially, we have a spread in between. So kind of making some part of our business as annuity business. So the 18 to 22% guidance that we have given for the year, I mean, while it is conservative and in the past, always kind of delivered better than that. But I think this is, again, I mean, the best growth that I think in the CPaaS industry, anybody is kind of talking about. And we are able to kind of allude to this kind of a growth trajectory, largely because of the global platform that we have today. I mean, there isn't any other CPaaS company who would have the kind of presence that we have globally, right from US till, I mean, any part of the globe. I mean, you look at, except for Australia and New Zealand, we have our presence now in terms of fleet of street. We were directly connected with 218 mobile network operators. Now, because of the Proximus reach, we are also now connected or extended our reach to about 450 networks. So, I mean, there isn't any other player who would have the kind of reach that we have today. And already, I think Microsoft deal, as I talked about, I mean, is a good starting point. It's a good validation of the group synergy. We are working on similar large strategic deals, securing volumes, and then tying those volumes up across 5 years, kind of converting that into annuity business. Now, from the telco standpoint also today, most telcos are today looking at digitizing its infrastructure. And that's where, I mean, partners like us, where we have kind of now coined a CPaaS in a box kind of a construct. We are taking those CPaaS in a box construct to telcos, deploying it into their infrastructure, and kind of making it completely a digital infrastructure, which they can then offer solutions to the SMBs. So these are the strategic pivots that we are working on. I mean, we are fairly confident of the next 3 to 5 years, we should be able to kind of embark on a strong growth trajectory.
Okay. In terms of margins, right, the EBITDA margin guidance is 13%. How do you see the margins increase from here on, both in FY25 and 26?
Yeah, so I think we're clocking, I mean, we are in the vicinity of the 12.5%, 13%. And this Proximus transaction will also entail a little bit of related party transactions, which will happen at about our EBITDA margin level. So it will be kind of a little dilutive on the EBITDA margin. So hence, we have kind of maintained that we will stick to the similar EBITDA margin that we are clocking today. So they're about the 12.5%, 13%. So we should be able to do the 13%. And if we are able to grow the business 15, 20% year on year for the next 3 years, there will be tremendous operating leverage that will play out. On top of that, I think the free cash generation of the business also should remarkably improve, I think, from this year onwards, considering we are not looking at giving any significant deposits to the telcos. So from an cash conversion, so EBITDA to cash conversion, I think we're looking at, 50 to 75% kind of a conversion, and the skew should be more closer towards 75%.
Gautam, you said your organic growth in the quarter was the best in the industry. Do you have a number to put to that? And just to check, you're saying the guidance is conservative, right? FY25.
That's correct. I mean, so I think we delivered about a 14% YOY growth. Organic growth, I think that was kind of the best in the industry. And especially, I mean, with a lot of these large deals, I think that are already in the making, some of the ones that we've already won, we are fairly confident of kind of clocking that 18 to 22% kind of the guidance that we have given. And if some of the large deals that we are chasing, I think some of them are at a negotiation, advanced negotiation stages. If some of them were to fructify, I think we should be able to improve on our guidance as well.
Okay, so if some of the large deals that you're currently in negotiation with fructify, then you will be able to beat your top line guidance. Just a quick word, what is your own estimate of the kind of billable transaction growth we will see and where you're likely to end the year with in terms of average realization?
Yeah, so in terms of the billable transactions, I think we anticipate kind of early teen kind of a growth, 10-12% kind of a volume growth. And in terms of the realization, I think it should steady around the current levels. We don't see any significant changes to the average realization.
Okay, all right. Thank you so much for joining us and speaking to CNBC-TV18. That's Route Mobile with an outlook on their business and the way forward. The market is not doing too much at the moment. It's very, very quiet, just consolidating. If we can take one look at the Nifty, okay, now it's actually picking up pace. up almost about 70 odd points. So that quiet move has actually moved to a bit of an up move right now. But just today, if you see the graph, right, for the first 1 hour or so, nothing much happened. But now we're starting to build on to our gains. So looks like it's going to be an exciting day of trade. Keep it with CNBC TV 18. With that, it's a wrap on Trading Hour.